What's the difference between volume profile and market profile? Hey, welcome back YouTube. My name is Mike Swartz, and today we're going to talk about the difference between volume profile and market profile. Now, if you guys have joined me during my live stream, you guys know that I pay attention to the POC and the value areas quite a bit. And if you guys want to join me during my next live stream, I stream Monday through Thursday at 8:45 p.m. There's two simple ways you can get involved. One, hit the subscribe button down below, turn on the bell notifications. The second way, if you'd like to receive an email notification half hour to an hour before I go live, you can click on the link down in the description box down below where it says join live stream, and I'll send you an email before I go live. All right, so what is the difference between volume profile and market profile? Like I said, when we look at the charts, you'll see the same vertical histogram on your chart, like, they're the same. They're not the same. And I want to show you, and I got both of them lined up on the S&P 500 on the same exact chart so we can compare the difference. And we're going to talk about how those charts are calculated and why I think one is superior over the other. All right, so here we are looking at a chart of the ES futures contract, which represents the S&P 500. Now, the profile on the left is going to be the volume profile. So the blue volume profile, the blue histogram on my chart, is going to be volume profile. The green histogram is going to be what's called market profile. Now here's what the difference is. Volume profile is how many contracts were traded at a specific price point. So the wider the volume profile is, the more contracts traded at that specific price point. And when I say specific price point, if I draw my crosshair right here, like on this yellow line, that means at a price point of 4127.75, this point had the most contracts traded. Well, you may say, well, Mike, what about market profile? It's, the yellow lines at the same exact price point or very close to it. Well, on the market profile chart, it does not look at volume. It looks at time. That's why they call it a TPO chart, time price opportunity chart. So if you hear the term TPO or you hear the term market profile, they're both the same. It's the same type of chart. Now, the way this chart is built out is the thicker part of the profile just means that more candles interacted with that specific price point. It doesn't necessarily mean that there was a lot of volume there. And here's why I'm going to tell you it's important. During the Asia trading session, there's typically not a lot of volume. And if we look right here on this day where my cursor is right here, we can see that the yellow line right here shows us that we had the highest TPO value at 41.15 on the price chart right down here. But on the volume profile, it tells me that the most highly traded point of the day was 41.49. So what do you think would be more important? An area where price spent the most amount of time, or the price point that had the most amount of transactions? All right. So to me, this tells me right here that more buyers and sellers both agreed that this was a fairer price than what was down here. During the Asia session, it's very light volume, so it can be very deceiving if we're just simply looking at a TPO chart. And a lot of times, it's not uncommon to see days where they line up relatively the same, especially when we get days that are like D-shaped patterns on the profile. D as in dog, which is what we have for Friday that just happened. Now the POC is a little bit different, but Friday we had a nice D-shaped profile. In the market profile chart, looks similar. It's a little bit sloppier, but it looks similar to this D-shaped profile over here. So a lot of times we'll get a lot of similarities, but to me, it's not as relevant. How much time the market spent at a specific price point is not as valuable to me as how much volume, how many contracts, how many shares were traded at that specific price point. And I'm going to show you guys some things that really, will help hopefully make a little bit more sense to you. When we come back over here and we look at, I want to go back and find that day that we used in the first example. I don't know how far back I was. Well, we can use this day right here. This was the day. I'm pretty sure it was the day. You guys can go back and rewind the video. If not, it's another situation that looks similar to this. But the market profile says this point right here, and I'm just going to draw a blue horizontal line right here, was the point of the day that was the most value, which means more price bars interacted at that price point than any other time period. Well, okay, well, that's fair enough. But the volume profile chart said, hey, the POC, or the point of control, this is the point on the chart where the most amount of contracts traded. Why is that significant? Because when the market starts to pull away from the POC, it's likely when we start to bounce to go back towards that price point. Just because the market spent a lot of time down here at this level doesn't mean that a lot of buyers or sellers saw value at that specific point. It just means that the market was quiet, or it could mean that the market was just quiet at that point in time, not that there was necessarily, perceived value. Now, where I think market profile does have a use in the market. In the Forex market, since it's not traded on a centralized exchange, I do think in that example, market profile is a good tool to use because we don't have no way to measure true volume in the market. So in the Forex market, I would not use the volume profile chart, and I actually used to use the market profile chart for that. So, just, keep that in the back of your mind. If you're a Forex trader, there's no need to try to put the volume profile chart on. Even if your broker supplies volume to you, that's only the volume that broker is transacting. That doesn't mean it's the total universe of volume in the Forex market. So in that case, I think it would be better to actually use the market profile chart. Now, let's look at some examples of how we can use this POC. And this comes in the form of naked POCs. All right. So if you guys have joined me during the live streams, you guys have heard me talk about this time and time again. A naked POC is the point on the histogram, let's say on this day right here on June or July 29th. This was the most highly traded volume of the entire day. That's going to be a price point of 44.12. All right. Now, this is considered a naked POC, or you may hear others call it a virgin point of control. All right. That just means on July 30th, the market has not come back to test that price point, and is considered naked or a virgin point until some point in the future where it gets tested. Now, what I will tell you is there's a very good chance that these naked POCs get tested in the next, couple days or so. So it's very important to mark those off in your chart. And you guys can see from this day right here, July 30th, we did not make it up to this naked POC. However, the very next trading day, we came right up here and tagged it. Now, again, this goes back into my mindset, why I think volume profile is more important. If a majority of traders saw value at 44.12, and we know that because that's the price point of the day that had the most volume transacted at that specific price, then the market is likely to be attracted to that price point again in the future. So keep that in mind. You really want to pay attention to the POCs on your price chart. Look at this day right here. Here was the POC right here. We came up. Oh, we came right back down, hit the naked POC. This is what happens on most days. However, I'm going to fast forward to current events. When I scroll my chart down on the S&P, we still have two naked POCs that I'm going to be looking to target as soon as we start to get a pullback in the market. That comes in at 43.5250 and 43.39.75. And you might say, Mike, that's over 100 points away. You're right, it is. But if I can get into a runner situation, well, guess what? This could provide some great secondary or third target locations if I can get myself into a runner. And that's why I think it's very important to keep these levels on our price charts. All right, so I tried to keep today's video short. Hopefully I did a good job at that. I didn't want to waste too much of anybody's time, but I have been getting questions in regards to what's the difference between market profile and volume profile. The key takeaway is market profile is time-based, volume profile is volume-based, and to me, volume tells us the whole story. Now, one more thing to take away. You may see some traders that have charts up and it looks like a histogram, but there's letters at each point of the histogram. The letters just signify which time period. So time period, the first time period on the chart is going to be all letter A's. Any B's is going to be the second 30-minute time period on the chart, or whatever time period they have their chart set to, right? So again, it's really all about what's the shape of the profile, where's the POC at, where's the value area at, where's the development areas at, and where's the minus development areas at. That's the real key points of the profile charts, regardless if you're looking at volume profile or market profile. Again, volume profile tells us where both buyers and sellers both seen value at, the most amount of value at, because that's where the most transactions took place, which leads me to believe that that tends to be a place that is deemed fair value in the market. So again, I do lean towards volume profile charts. You guys see me talk about them a lot during the live stream and even in my S&P analysis videos that I do each night. But again, everybody has their own preference. Market profile is more suited for the Forex market, in my humble opinion. So if you guys found value in today's video, don't forget to give it a big thumbs up. I appreciate it. Till next time, good luck and good trading.